All right, good morning. Today is Monday, April 5th. I hope you had a wonderful Easter weekend. The highlight in our house is always the Easter egg hunt, and yesterday was just a beautiful day here in Minnesota for being out and doing that. All right, so today is the first Monday of April, and it's also the first day of the second quarter. So if you're an existing client of ours and have not been in for a review in a while, please take a minute to call Marilyn at the office here or visit our website and schedule some time to connect. This review can be an important discussion, particularly if your investment objectives or your risk tolerance has changed. Additionally, there may be some important management or strategy updates to share with you one-on-one as well. All right. All right, so to get started today, I have a couple of housekeeping items for you, and then we will look at what happened in the markets last week. So last week, I hosted our monthly economic outlook with Tom Fox. We talked about the positives happening in the economy. We talked about potential headwinds. We talked about our outlook both this year and beyond. So if you missed this event, or if you were there and you'd like to review the information in more detail, go back and watch it, you're welcome to do that. The recording is now up on the website as well as on our Facebook page. So if you go to investwithccg.com/events, you'll see the recording here. Or if you just go to our Facebook page, you'll also see it if you just click on videos here as my screen loads for you. Go to the Facebook page, click on more, and you'll see videos, and you'll see those economic updates are posted down here for you as well. So you go back and watch those if you missed it, or if you'd like to review that information again, you're welcome to go ahead and do that. So that is the economic outlook recording. Last Thursday was the first day of the month, which means that if you have a retirement plan at work and we're sending you allocation instructions, updates were made. They went live at 8 a.m. Central Time last Thursday morning. So if you haven't already, be sure to log in and look at getting your retirement plan updated. If you have a retirement plan at work and you're not getting our monthly allocation updates, you can learn more about the service by going to www.401kinvestmentpros.com. All right, so with that, I am going to roll the intro and then dive into this week's update with.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
All right, so let's take a quick look at what is going on in the markets. In this week's recap, the markets reacted positively to infrastructure proposals, and the S&P 500 rose above 4,000 for the very first time. Remember, if you'd like me to email you a copy of our full update every Monday, you can subscribe at our website. In this update is also our financial tip of the week. This week, we are talking about things to consider as you retire. So you definitely want to pay attention to that tip of the week if you are nearing or recently retired. But we also share some key economic data that we're watching, as well as companies reporting earnings this week, a quote of the week, as well as some of the figures that I'm going to report here with you today. So let's take a look at that. So overcoming a rocky start, stocks rallied into the close of last week's shortened holiday week of trading. Technology shares staged a powerful recovery, and investors reacted positively to President Biden's infrastructure spending proposal. The Dow Jones Industrials Average gained 0.24%, while the Standard & Poor's 500 picked up 1.14%. The tech-heavy NASDAQ Composite Index rose 2.6% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, slipped 0.43%. For those of you in our proprietary Smart Mix portfolios, I have some preliminary end-of-quarter performance numbers for you. So let's take a look at those. All right. So as you know, Smart Mix consists of 4 individual strategies, and we mix them together uniquely for every client that we work with. In our wide moat strategy, if we look at year to date, you'll see year to date wide moat strategy is up 3.8%, and that is January 1st through April 1st, so the first quarter, as compared to the S&P 500, up roughly 9%. Move that forward here. If we look at 1-year trailing return on the wide moat strategy, up 76.7%, as compared to the S&P 500, up 65.4%. A second strategy, one we call thematic. Thematic over the last 1 month actually was pretty soft, pulled back 3.9% when the overall market, like I said, was up 3.2%. If we look at year-to-date number, it is still in the green. It's up 3.4% year-to-date. You can see it was leading the way quite heavily there. Earlier in February. And then we've seen a lot of softness. A lot of that is correlated to the rise in interest rates and what's been going on with the bond market. We talked a lot about that last week in our economic outlook. So if you have any questions about that, definitely go back and watch the recording, and we go into more detail on what we think is going to happen. We do think that the thematic is going to come back well and be leading by the end of the year. But again, Tom and I go into more detail on that in our outlook from last week. So go back and watch that if you have any questions. Then if we look back at the 1-year trailing on thematic, so this is April 1st of 2020 through April 1st, just the other day here. S&P 500 is up 65%, like I said, and the thematic strategies is still holding on, up 151%. Again, the recent kind of pullback here that we've seen, we do think is temporary. We think it's tied to the interest rates and what's been happening with the bond market. But again, we go into more detail on that in that economic outlook from last week. So I'm not going to do that here today, just reporting some numbers here for you. If we look at our fixed or alternative strategy, this is the strategy that we use to kind of balance out the volatility and risk of the overall portfolio. If we look at this on a year-to-date basis, holding up very well. It's up 0.5% as compared to the total bond market, as reflected by the Vanguard Total Bond Market ETF, down 3.2%. If we look at a 1-year trailing return on this, you can see that the total bond market, again, that Vanguard Total Bond Market ETF, positive about 1.4%, as compared to our Smart Mix fixed alternative strategy, up 14.4%. So doing well. And again, we go into more detail on this in the economic outlook, but a lot of our fixed strategy has been moved out of the bond market because of the issue with interest rates and what's going on there right now. And then lastly, this is a new strategy that we have, newer strategy started earlier this year. We call it our aggressive core strategy. S&P 500, like I said, up 9% year to date. This aggressive core strategy was doing much better. It is still holding on, up 45% year to date. But this strategy is not for everyone. It's very volatile. It's a very bumpy ride. It's for our aggressive investors only. Of course, if you have any questions about any of this and would like to go deeper into this and how it correlates into your personal portfolio, or if you're not in Smart Mix and you'd like to learn more about how it might be a fit for you, it's not the right fit for everyone. But if it is a fit, be happy to have that discussion with you, and then also talk about how we can custom weight each strategy, given your unique and personal situation. To learn more about that, simply go to smartmixportfolios.com. All right, so with that, let's go ahead and look at a little bit deeper what is going on in the markets last week. So Monday opened with 2 banks reporting that they face losses due to the default of a small U.S. hedge fund. That news, combined with rising yields, higher new cases of COVID-19 and a public warning of new virus variants, started the week off in an unsettled note. Despite that shaky start, upbeat economic reports helped spark a rally that was paced by gains in the technology sector. The market also reacted positively on Wednesday to the introduction of a $1.9 trillion infrastructure proposal. And then stocks closed out the week with an exclamation mark, with the S&P 500 index closing above 4,000 for the very first time. So let's talk a little bit more about those hedge fund woes and what's going on there, and if it's something we should be worried about. So like I said, last week's trading opened on news that a US-based investor was forced to unwind positions in multiple Chinese technology companies and American media holdings. A number of large banks saw their share prices fall early in the week, reflecting concerns about their exposure to the hedge fund losses. Meanwhile, investors grappled with whether this was a one-off event or the opening act for additional hedge fund issues. As the week wore on, it appeared that the hedge fund issues were, in fact, an isolated event. But I'll continue to keep my thumb on the pulse of what's going on and report back to you anything that is worth reporting back to you. So with that, I have actually got a staff meeting I need to go jump right into. So I'm going to sign off. There is a lot more in this week's full update. So if you'd like the full report, head on over to our website, subscribe, and I'll be getting that email out here probably early this afternoon.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.